What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines, and Happy New Year, everyone. 2026 is here. It's our first podcast of the year, and this week, I've got a brand new guest in the studio with me to record What's Making Headlines in the form of Julian Barnes, the new senior journo on Broker Daily, our sister title. Hi, Julian.
Hi, Annie. Thanks very much for having me. It's great to be on.
Welcome, and talking all things mortgage broking, what you've been writing about on Broker Daily. We've only really been back for a week, so it's been a fairly slow news cycle so far. But I think at the beginning of the year, as always, we have a lot of people looking at, well, what's going to happen this year, looking ahead, planning for the future. And we've both been talking a lot on The Advisor and Broker Daily to our readers about what they expect to see happening in 2026. You're still relatively new in the role, though.
Yeah, absolutely. So, I've been hitting the ground running, trying to get in contact with as many brokers as possible, which has been really fun. Obviously, at the moment, a lot of them have been out of office. I even talked to someone in Bali the other day, but it doesn't mean that they're not, looking to the future, looking to 2026. There's a lot of, maybe news might be slow, but the anticipation of what's going to happen over the year is, definitely heating up.
Yeah.
There's been a few decent bits of news about that we can talk about this week. So.
Well, maybe what are brokers sort of telling you that they're going to be planning on for this year that you've been, chatting to them about?
Well, there's been a bit of anticipation. Obviously, just before we went away for holidays, we saw the rate hold. There's been obviously worries about inflation. There's been worries about interest rate hikes. We'll get into that and unpack that all later, I believe. But really, they're looking to kind of move into a more advisory role. They've kind of seen that different kind of speeds of lending, different kind of products are definitely needed for businesses. Obviously, in my reporting this week as well, we've seen a big rise this year in investment loans.
Yeah.
It's really taken up a big part of the market, particularly in certain regions. So there's definitely a lot of different kind of products. 2026 is going to be a really exciting year for them, I think.
I think it's actually really interesting because 2025, obviously, and everyone listening to this will be like, oh, thank goodness we had the holiday, because they were working right up to the kind of Christmas Day pretty much, or to the sort of, holiday period. And I think a lot of people were like, 2025 was a massive year, and across all segments of the market. So investor lending, as you mentioned there, we've had decade highs. The volume of investor lending coming through. We've had a huge amount of SMSF lending going through. We've had a huge amount of first home buyer activity going through, which we'll talk about in a bit. So pretty much every part of the market has been really, really booming in 2025. But come 2026, I think there's a lot more chatter now about potential rate hikes. So that might cool things down a bit. House prices obviously being, continuing to increase. That might cool things down a bit. But I still think there's going to be a huge amount of demand. And I think a lot of the brokers we've been chatting to have been like, it can't continue the same way it has been in 2025. Even though that'd be great for their business, they're like, it's actually just, it needs to cool down a bit. And I talked to a few for The Advisor on what they're going to plan to do to actually grow their businesses this year. Because of course, when you're doing the day in, day out of broking, you're flat out just trying to get deals done. It can be hard to actually build your business and think about, well, how do I take this whole brokerage to the next level? And I was sort of asking different brokers, well, what are you doing to drive further growth this year? And a lot of them are actually like, we're going to look at buying things. So whether buying other brokerages or buying trail books, just sort of looking at merging and bringing in other businesses to grow. So I thought that was quite interesting. And we've seen that trend over the last few years. I think many more brokerages actually doing M&A. We've seen people kind of saying they're going to bring on more staff because they need to keep up with all this demand. They want back office support. They also want more brokers coming in. We've seen lots of people think about their marketing as well and being like, how do we ensure that we're still being found by our borrowers? And we'll talk about this later and how the new kind of GEO and AI platforms are really driving this too. And then also looking at process. And I think this time of year, many brokers are either still on holiday or they're really in planning mode until Australia Day. They're kind of like, well, I'm just going to think about how I'm actually going to scale my operations this year. Maybe write down finally my process, put that pen to paper so I can hire and I know that I've got it all written down. I'm ready to go and hit the ground running. So that's a lot of the brokers sort of looking at really growing this year and growing their teams. Do you think that any of them are sort of saying they're going to see a particular area that they're going to be growing in? Like, is it all just investor?
Yeah, so investors definitely a big part of it. I think a lot of brokers are looking at that kind of lower end part of the market with the new schemes. Again, we are going to be unpacking that a lot more, but they're seeing a lot of people entering the market. They're looking at their role, particularly from an advisory point of view at the moment. So it's about kind of getting people up to speed with what products they have, what products that are available to them, what schemes are available to them. You know, people that may, be entering 2026 thinking, I'm looking to get into the housing market and, these new schemes could be my chance.
Yeah.
In terms of other ways, we all have the same amount of hours in the day. And I think talking to a lot of brokers about what they want to do is streamlining through technology, through AI, trying to make sure that each and every broker uses their time as well as possible. And every hour counts. So making sure that those kind of nitty-gritty processes that shouldn't take too long end up actually not dominating the day.
Yeah, absolutely. And this is, again, something that we've been talking about a lot the last 4 or 5 years, really pretty much since COVID, is really the acceleration of technology. I think there was a story on Broker Daily this morning actually looking at saying tech is no longer an add-on, it should be in your DNA. And that was part of the podcast that Alex Whitlock and Jason Back recorded together for Business Accelerator. So definitely check that podcast out if you haven't already, because there's really loads of great tips in there about what tech you can be using, how brokers are using tech, and why it's really non-negotiable nowadays. But you mentioned there some of the schemes, and I think this has been something that we've been talking about a lot. So obviously we had in October the expansion of the first home buyer guarantee scheme, and then in December we had the Help to Buy scheme launch. Both of those have been dominating our headlines this week. Let's start with I called it the first home buyer scheme. It's the 5% deposit scheme or the first home buyer guarantee scheme, whatever you want to call it. Yeah.
It needs to be catchier. Absolutely.
The 5% deposit scheme, as it's now called. So that expanded on the 1st of October. And we keep getting updates on stats about what that's doing in terms of engagement, but also in terms of house prices. And some interesting information came out from Cotality at the end of this week. What did it find?
So the 5% deposit scheme, which obviously launched early, 3 months early in October, basically found something quite interesting in the data, which is that caps grew with house prices within the caps grew by 3.6% as opposed to 2.4% for house prices above the scheme, showing that, you're seeing house prices for people that are eligible going up a lot higher. This is kind of creating this situation where the people who need to buy, entering the market for the first time, are seeing much faster price increases versus the people who maybe have been in the market for a lot longer.
Yeah.
So during the December quarter, 89% of suburban areas recorded fast growth in properties priced within the caps compared to higher priced homes. And that recent expansion has removed caps on places and income limits and property price caps to better reflect that median home prices. So those have gone up a lot more. At the MyEFO on 17th of December, we saw that 21,000 people have already used this. So brokers are really saying that there's been a real surge in the amount of people that are using it. They're seeing blowouts in banking time, in turnaround times.
Yeah.
There's been a lot of issues around there. And it very much depends on where you are in the country. But some of the brokers I've talked to have said that they've seen quite substantial house price increases at that lower end of the market, which obviously makes it very difficult for you to plan, through pre-approval into actually getting your home, because the house prices are changing so rapidly.
Yeah.
So it's presenting a lot of issues, but potentially also some opportunities there as well.
Yeah, and I think when we were talking about the scheme when it first announced that they were going to be expanding it, we did do loads of chats with brokers to be like, what do you think? And nearly all of them were like, this is only going to push prices up further. They were like, we were just constantly focusing on the demand side. We're not focusing on the supply side. If you bring in an unlimited amount of people to use the scheme, then they're all going to be focusing on properties within those price caps. I think in Sydney it's 1.5,
It's 1.5,
which is quite high.
Which is quite high. I
mean, Sydney prices are high anyway, but I mean, like 1.5 and below within the caps, and you don't need to have a certain income. No. It's not means tested. So that now means that a lot of people, nearly all first home buyers probably, will be looking in that range. And so of course, property prices are going to increase because you suddenly have, what was it, 20,000 people using the scheme?
21,000 people already using the scheme.
Yeah, so that's since it expanded. So since the 1st of October. Exactly. So really just looking at how many more people are actually competing, of course it's going to push up home prices. But I thought that Cotality research was really interesting, saying it was around like a 3% increase within that lower price bracket. And of course, if that continues another quarter, let's say it goes up another 3%, a 6% increase in prices in that bracket, it means that you're just constantly going to be trying to save for that deposit, even if it's only 2%.
Yeah.
Constantly going to make it harder and harder and harder. So it's a real problem. And I think supply is the thing that really the government needs to be focusing on in order to try and alleviate this accelerating house price issue, regardless of whether it's below the caps or above the caps. But I did think it was interesting, your point there about brokers seeing it differently in different markets. Of course, it's not one market in Australia. There are millions of them. So I think one broker in the Blue Mountains was saying, not really seen that much increase in prices. It's been relatively small. Others have been like, it's been absolutely shooting forward. So I think particularly in Perth, for example, really seen a big house price acceleration. So yeah, I think the main job now for brokers is to make sure that people are aware of that. If they are looking at saving and using the scheme and they think, great, I've got my 2% deposit saved up, just making sure that they're aware that might not actually be 2% because house prices are increasing so fast. Is that what they're saying?
Absolutely. So we spend a lot of time talking to brokers, kind of asking them how they've adapted to this kind of price change, what they're telling their customers. And the main thing that kind of came out of it is two things. So advice, making sure that, this scheme is, the whole point of it is to try and get first home buyers into the market. So this is people that are not necessarily dealing with brokers very often. It's people that haven't really dealt with mortgages, with lending. So to give them the education and the advice, and also setting realistic standards as to what can be achieved, what they can buy and what their kind of price point should be, given the market's changing so fast. And the second thing that a lot of brokers said is making that kind of time frame a little bit longer. As I said, there's been a few blowouts. There's been slowdowns in terms of how quickly loans can be turned around.
Because I think even before Christmas, we saw at least one lender actually pause any applications for the 5% deposit scheme because they were like, we can't service this amount of loans. So there was definitely delays and people were just being like, our doors are shut for now. Yeah,
and looking forward to 2026, obviously some of the brokers were also saying they feel that there's a bit of pent up demand there because obviously Christmas, a lot of people put their plans on ice. New year, new me, people are buying homes and people are looking to kind of start their future home. So they are looking at the scheme to say it may keep going at that momentum because of that pent-up demand there.
And also because people would have probably read all the coverage, of course, on the Advice on Broker Daily about what house prices are doing. So we know that in 2025, prices rose by about 8-point-something%. I think it was 8.6%, depending on who you talk to.
Yes.
And in 2026, the forecasts at the moment seem to be, they change rapidly, but they seem to be saying house prices will increase by another 6 to 8%.
Yeah.
And again, that depends on who you talk to. But if you think that that's, really going to be where we're going to be landing at the end of 2026, could be a 16% rise from 2024 figures, then you're kind of like, well, that would be really pushing a lot of people into market, being like, I need to get in now because I can't afford it if I wait another year or another 6 months. So this demand really coming through as people are kind of understanding that maybe house prices will continue to accelerate. Demand is going to be really tight. It's going to be really hot and supply is going to be really tight. So I think, lots of really great education from brokers on what these schemes actually do, what they mean in reality and what they actually look like, how you can save for them, because there's so much that needs to go into this in terms of education. The brokers are doing a great job of, including educating people on the new Help to Buy scheme, which we'll talk about just after this break. So Help to Buy, which was the very long-awaited shared equity scheme that finally got launched just before the holidays, has been sort of increasing in its presence because just before the holidays, it launched in all states apart from WA and Tasmania. And this is the one where the government will purchase a property in partnership with a home buyer to help them get into the property market. And it's really focused on lower and middle income earners. So this is means tested. And it started, as many people remember, with only 2 lenders, CBA and Bank Australia, and only Bank Australia is making it available through the broker channel. CBA is doing it direct only. But this week, WA came online. So they passed the legislation to make Help to Buy a thing just before Christmas. So now it's actually available to WA home buyers. And there's 1,100 low to middle income earners that they expect to be able to access the shared equity home buying scheme in partnership with the federal government this year in WA. And really looking at it, I think for WA, eligible participants can buy property up to $85,000 in Perth and up to $600,000 in the rest of the state. So that's if you've got a 2% deposit, and obviously then you go in partnership with the government to buy a home. So 40% for a new home, 30% for existing homes. Brokers, again, you chatted to this week in WA, over in WA, and I chatted to them as well about what sort of things they were seeing, what they think about the scheme, whether they'll be using it. We kind of actually had lots of commentary from WA brokers. I think over there, they're still obviously working gangbusters because everyone responded in record time. But yeah, we were asking them, well, what do you think this is going to do? Are you going to be using it? And a lot of people said there were problems. What were the problems?
So there's no rest for WA brokers at the moment. Look, the problems are kind of similar to what we've seen with the 5% deposit scheme. There's a lot of concern that this could push prices up even higher. There's, Western Australia and Perth is a very supply constrained market as it is. So the same kind of issues there where it's going to push up prices. Mainly when we talked, the big concern was kind of in the regional areas where I think the cap is $600,000.
Yeah, a lot of them saying
which a lot of brokers saying is way too low for the actual realistic prices that you're going to be looking at there. So it may not be able to help the people in as much as they're hoping. A lot of them said that the main issue as well is brokers haven't been brought on board enough yet, and to have brokers in the discussion, in the debates, in the room, making sure that people have the right advice is the main kind of thing that they see is needed to make this successful.
Yeah, and I think this has been the main problem because it kind of had been dawdling along for so long. We hadn't had any information about it other than what was in the legislation. And of course, we've written about it both on the Advice on Broker Daily about what was in that legislation. But until you actually see the sort of consumer-facing side of it, really, from Housing Australia, which is the body that administers the scheme, it can be super hard to understand what that means. So, trying to digest the legislation and being like, how does that work in practice? Well, we obviously knew the price limits. So actually seeing it finally launch in December and getting more information come through Housing Australia has been really beneficial. But the really interesting things for me in the Help to Buy are, well, what happens to your property value? So if your property value goes down and you own half of your property in partnership with the government, and then you want to sell your property, you might end up owing the money. It's sort of a bit like, well, how do they all share in the profits? If they've actually put in more money than the house is now worth, there's a lot of questions around, well, what happens then? And of course, if you read all the sort of the terms and conditions, it does talk a lot about this and saying the whole point of the scheme is that people pay the government back. They don't want to be owning property. They are just helping people get into the property ladder, and they assume that you'll pay them back within, I think it's 10 years. But yeah, lots of brokers saying, well, if you think about $600,000 being for all areas outside of Perth, there are some areas like Busselton, down around Margaret River Way, Albany, that are really growing, quite substantially, becoming big regional centres. And they were like, $600,000 just is not going to cut it. I think the Busselton brokers particularly were like, most of our properties are over 800, 850. So we'd like to see that cap increase to actually make it achievable and realistic.
And that's now, as we've already talked about, we're seeing house prices rise a lot. This is yet to be stress tested, but in, let's say, 6 months to a year, these caps may have to be revised.
Yeah, Busselton's got a new airport now. It's become a real, tourism hotspot. So kind of being like, these property prices are going up quickly. This is just not going to work. You can't find any properties really for under $600,000. So they were sort of saying it would be great if they actually revise these price caps because this is not going to be achievable. So lots of brokers saying they're not really thinking they're going to write that many loans of it, even though there's only 1,000 in WA, because they were like, it just doesn't work. Interesting. Help to Buy. And I think, again, we'll be looking more about this year on who else is going to be coming onto the lender panel for it. They were consulting on that just before the holidays. We expect to know, I think by March, they think they'll be adding their first new lenders to the scheme. So we will be asking them, obviously, will it be available through Broker Channel? And we hope to see more lenders coming online. Because again, lots of brokers saying the fact there's only 2 lenders on the Help to Buy scheme lender panel means, and only one of them actually works through Broker, means poor Bank Australia is going to be swamped.
Inundated
yes. With requests for these applications. So they were like, we'd like to see more lenders so we don't have blowouts and turnarounds here as well. So lots of things happening with Help to Buy, of course. Other big things, though, that have been happening this week include the inflation data and what that means for rates. And we'll get into that just after this. So this week we had the Consumer Price Index data released for the month of November?
November.
Yeah. It's late. So November, what happened then? Black Friday happened. So lots of people spending. I was actually one of them. I did pretty much all my Christmas shopping during the Black Friday sales. Not because I'm cheap, but just because I was looking at all of the sales and was like, I want to buy all these things. So I did a lot of my Christmas shopping then. So I would have contributed to some of this retail spending. But what else did the CPI data tell us? Was it up? Was it down? Was it where people expected?
So it was a bit of a surprise, but not substantially enough to really change many predictions. So the CPI rose 3.4% in the 12 months to November, which was down from the quite large 3.8% rise in the 12 months to October 2025. Trim mean inflation, which obviously is the one that the RBA is going to be really looking at, was 3.2% in the 12 months to November, down from 3.3%. Now, looking at the big four banks, a lot of them had it just slightly higher. They're expecting it to be a little bit more. So it was a welcome surprise, and a lot of them did say that. Federal Treasurer Jim Chalmers also said that these results are very welcome and encouraging. But from the bank's point of view, this hasn't really changed their mind. Before we move on to that, I just thought I'd mention, the main factors contributing to this inflation. So housing, which rose, as we've already talked about, 5.2%, food and non-alcoholic beverages, 3.3%, and transport up 2.7%. There was a lot of spending around Black Friday, but the ABS didn't see it as massively important in the overall contribution towards inflation.
Yeah, I suppose also because it would have been like sales. So even though people were spending a lot, it would have been reduced prices.
Exactly.
So probably not actually.
And this new monthly collection means we actually can kind of measure it a lot more. This is quite a new way of doing it, which means that the RBA, I think we'll get onto this in 2 seconds, we'll be looking at the kind of December quarter data, which is out, I believe, 28th of January.
Just after Australia Day, yeah.
Yeah, just after Australia Day, but crucially before the 3rd of February, which is the next rate.
Yeah, and this is what we've all been talking about because we moved to the monthly data collection, I think in October, maybe it was October, November time, from the ABS. And everyone was like, this is great because we get to see more frequently how our inflation is tracking. But it still doesn't include the whole basket because some things aren't collected on a monthly data basis. So I think when the minutes came out from the RBA from the December meeting, which, as you said earlier, they held at, the RBA had actually said, we're still going to be using the quarterly ones. We'll obviously be looking at the monthly ones, but we'll still be using the quarterly ones because that's a fuller picture. And also, I think they were still thinking about, well, how do we even look at this data? How do we understand it? How do we interpret it? I think there was some question from the Monetary Policy Board around that. So 28th of Jan will be the quarterly data for December. I think based on what we've been seeing so far, hopes are that it will be down. And we know already, obviously, October and November figures, so it should be. But still not within the 2 to 3% target band. And this is what obviously the RBA will be looking at, being like, we want it within the target band. It's still not there. So questions will be like, well, then do they need to do something? Do they need to cut rates? Or if the alternative, people are spending too much, do we need to increase rates? And I think there's still some jury's out about whether they'll be going up, going down, holding. Depends who you ask.
It definitely depends who you ask. It does seem to me that overall sentiment has moved a lot away from a cut. It looks like the major four banks are kind of looking at either increases or holds. So to put it in perspective, they haven't, after this data, most of them said it was welcome data, and they said it was, a step in the right direction, showing that perhaps the inflation statistics recently are more of a blip than an overall trend, which obviously the CBA was worried about. The RBA was worried about. But Commonwealth Bank of Australia still predicts, same as before the holidays, that there'll be an increase of 25 base points in February. ANZ rates to hold, Westpac rates to hold, and NAB rates to increase by 50 base points, 125 base point in February and 1 in May. So these are all the same as I believe we reported on the 17th of December.
Sorry, so CBA and NAB both saying 25 in Feb, but NAB also has an additional one.
An additional one, exactly, yeah.
Yeah. So still the same as before the holidays. And I think this is interesting because I would have expected some of them to have moved. And I think even the fact that we're having this conversation where the big four are saying hold or hike is pretty interesting. And that also goes off the back of the minutes, which came out on the 23rd of December. And I was one of the very few people who was actually still working and reading RBA minutes that day, I think. It was like my emails were silent that day. I was like, come on, guys, the minutes are out. Exciting. But yeah, in the minutes again, they were saying we didn't even talk about a cut. Like we only talked about hold and what it would take for us to hike. And you wrote a story, I think, for this on Broker Daily this week around, well, what will it take for the RBA to hike? And they're looking at what the Economist is saying needs to happen. Really interesting read. So if you are interested in macroeconomic theory, go and check that out. But I think that means then for 2026, at least one hike, according to half of the big four. And then the others are sort of saying maybe a prolonged hold. So no joy for anyone thinking about waiting until rates come back down again, because it doesn't look like they're going to.
Exactly. And we also saw, a lot of the major banks also, raising their fixed rates in anticipation for a hold. I think talking to brokers, seeing what the banks say, I think there's just a lot of anticipation as, where will this inflation data take us? Is it, as we said, is it a momentary blip? Is it something that's kind of, off the back of certain extenuous factors, such as, we had the energy rebates. We've obviously had the Christmas spending and things. Is it that, or is it, reflective of something a bit deeper? If it's something reflective of deeper, I think there could well be hikes. If not, I think that the RBA is just, it's biding its time, really, isn't it?
Yeah. And I always think, obviously one of our kind of professional hazards is that because we're so engrossed in the economic data, we always get asked by people, what do you think is going to happen? And it's like, how long have you got? Because it really
I have no crystal
depends.
ball. Yeah.
But it also is like, look at the data. It's telling us so many different things.
Yeah.
Like people are spending, people are saving. There's not a lot of like real hardship in the consumer side of things. But then there's a lot of stagnation in manufacturing, services. Inflation is really high. So it's sort of like, it depends where you look. Like different parts of the sort of economy are pushing and pulling at different levels. And sort of like, well, it's quite hard then to form an overall picture of what the economy is doing. And I think that's the RBA struggle. And this is what Michelle Bullock's been talking about a lot, is being like, it really is quite hard just to have this one lever of penalizing people with a mortgage, basically, to try and cool inflation if it's not coming from consumers. So yeah, difficult
it's
job.
A really hard thing. And you kind of saw that in the minutes that, the three kind of things they were looking at: labor market, overall CPI inflation, and also financial conditions. And, in the labor market and in, the inflation, there was kind of a unanimous view, but the financial conditions, they weren't as sure on. And that was kind of the sticking point that came out of the minutes, really.
And talking about things that happened before Christmas that no one cared about, apart from me, there was also actually in December a second hearing for the New South Wales inquiry into payroll tax, which has been rumbling on in the industry for a while. And actually sat on this story until this week because I was like, I'll wait until people are back and they read it.
Yeah.
So there was a hearing on the 15th of December here in Sydney where several members of different industries represented at the inquiry, including the broking industry. So Peter White, the Managing Director of the Finance Brokers Association of Australia, went to Sydney and was asked lots of questions around what is happening with the broking industry and payroll tax, what he believes should happen. And we also heard from a tax specialist who's done a lot on the broking side of things as well, Jack Aquilina from Denton's, looking at, well, again, what should happen here. So Cliff Notes to catch you up if you haven't been paying attention to the payroll tax issue. And where have you been if you haven't? Because it's been a big problem. So there was a loan market case in 2024. No, I'll go back a further step, actually. Revenue New South Wales thinks that aggregators should be paying payroll tax on broker commissions, in effect. Under certain scenarios, they were saying, we think that there is really a relevant contract here where payroll tax applies. And so therefore, we'd like you to pay a proportion of your broker commission of your income from broker commissions to the tax office. All the aggregators pretty much say, no, they're not contracted to us. Brokers are not employed by us under a relevant contract. And again, there are exceptions to this. So you've got to kind of be careful. I've got to be careful what I'm saying. Mm-hmm. So certain relevant contracts, particularly if you're a sole trader, is what really we're focused on. There was a loan market case in 2024 which challenged the reading of the law, and the court found in favour of Revenue New South Wales and said, no, we think payroll tax applies, but we think this is a kind of unusual reading and not what the legislation actually intends. So the New South Wales government has been like, well, let's look at whether this is actually a relevant contract and maybe we should be looking at changing the law because the government and Revenue New South Wales are the people that are looking at this interpretation. So they're saying, should we be changing the law? they've been holding an inquiry into it. We actually did a podcast with one of the members of the Legislative Council who's been holding this inquiry last year. If you want to take a listen to it, you can find that on both on The Advisor and Broker Daily. That was with John Ruddock. He was chatting about it and being like, really, we think that certain industries are falling under this that shouldn't. For example, broking. Now, John Ruddock actually used to be a broker, so he has a lot of sympathy to the cause. And Uber is the other big company that's been caught up in this as well. Yeah. So they've been doing a lot with the broking industry recently, Uber and broking, looking at what on earth should happen here. And Peter White was talking to the inquiry and saying, look, I just don't think that this should apply. And I'll read some of his quotes to you. So he was saying, the characterization of a broker providing services to an aggregator runs completely counter to how the arrangements work. He basically was saying that aggregators function as a means of enabling brokers to access a panel of lenders. They weren't really like employing them in a contract where they work for them. So he said, to be clear, the relationship between an aggregator and a broker is not structured to avoid tax or obligations of either party. The arrangement is not a sham to circumvent employment laws. Aggregators provide services to brokers. Aggregators exist to help self-employed brokers. Aggregators have access to a wide range of panel of lenders so that brokers can provide services to their clients. Brokers find the client and have a direct relationship with each one. Aggregators have no relationship with the individual clients of the brokers. So he was basically arguing, look, they're not employed by the aggregator for this client. Like, this isn't relevant. So he was saying, really, this shouldn't come into it. We don't believe that payroll tax should be applied to aggregators for the broking industry. And he was actually saying he also doesn't believe that it's fair that Revenue New South Wales is chasing aggregators for historic back payments. So basically not only penalties for not having paid it, but also wants, I think it's up to 10 years of tax payments. So for loan market, that's millions and millions and millions of dollars. I think it's more than $20 million. And for many of the aggregators who are also facing these bills, are also challenging it. We have a Finshaw court case on at the moment, which is also challenging the interpretation of the payroll tax law, because each one now has to challenge the reading from Revenue New South Wales individually. So New South Wales is going, okay, maybe we should be changing things. Let's hear for some evidence. So they did talk to a payroll tax specialist, Jack Aquilina, who people on The Advisor might have seen on our webcast on payroll tax in 2024, I think it was. He talked to us there about what he believes should be happening. And he was actually saying, this is really an unfair payroll tax on small business owners. So he said, remember, payroll tax is a tax on employment. It's not a tax on transactions. It's not a tax on supply chains. It's a tax on employment relationships or things that mirror or are similar to employment relationships. And again, he was saying, and in this case in broking, basically, that's not really applicable. So he was saying, really, I don't think technically that the most vulnerable people in the supply chain who are suffering the most, the economic issues that are associated with this tax, because they're being passed on the costs of this tax. So he was saying, actually, it's impacting quite a lot of people, small business owners. So suggesting that maybe the act be reformed to understand, is the worker truly part of the principal's business? And then does the principal control the work that the worker's doing? So basically being like, this should be what the test is. So only Parliament obviously can change the legislation. So this is what the whole inquiry is looking at. Now, there isn't a short answer to when we'll have an answer to what the inquiry is doing. I've had a look at the timeline and been like, there's just nothing coming up in the future. The Finshaw court case is ongoing, as I mentioned. So I think they may want to wait and see what happens then. Finshaw had their first hearings, I think, in the Supreme Court in October. And I don't think we'll have an answer to this if the loan market case is anything to go by for like a year. So maybe by the end of this year, we might have an answer on what that court case is doing, but hopefully earlier. So I think the New South Wales inquiry may wait and see what happens with that court case before deciding to change any laws, but there's lots more to come. So if you are interested in finding out more about what the payroll tax case means, then do check out all of our coverage on The Advisor. Now, looking forward for the rest of the year, we're still in a fairly quiet time in the summer holiday period. Come Australia Day, we'll be ramping back up again into February. And then we've got the Better Business Summit starting, which we'll both be attending. Absolutely. And we're super excited about that. And this year, the Better Business Summit is such an important one to attend because it's all about the new way of being found by customers, but also really about making sure your brokerage stands out from the crowd. So we're talking about how large language models like ChatGPT are recommending brokers. So lots of people now are using ChatGPT and large language models to ask advice, and they'll be like, what broker should I use? So we're looking at GEO and how you actually ensure that your brokerage ranks on that. So it's different from SEO. So if you don't know anything about that, make sure you come along to the Better Business Summit because it's so important to be found. We're also talking about how you actually run a top leading brokerage. So we're really pleased that we've got Darren Little from Smart Move, one of the top 25 brokerages in the country, coming around the country with us for the Better Business Summit, talking about how they do it, how you build, how you scale. They've got over 100 people at Smart Move. So being like, this is a major business. How do you run a major business? We have a Shark Tank shark, Maxine Horner, coming and talking to us about what she thinks amazing businesses do, and obviously all of her experience talking to entrepreneurs and small business owners around what it takes to be the best. So that will be fascinating. And we've got Russ Easter, and who's a digital tech specialist, and Adam Franklin talking about what they're seeing in technology. Plus, if that makes you think, well, that all sounds brilliant, but I'm going to be exhausted by the end of it, we also have a performance specialist in the form of the Chief Operating Officer from Sydney Swans talking to us about how the Swans team really drives for success, but also how they do it sustainably without burning out. So it's going to be an amazing summit. We have some amazing things going on for the first time this year as well at the Elite Broker Breakfast. We've got the awards coming on in the evening. It's a huge, amazing day. So if you haven't already bought your tickets, make sure you do. The first release tickets are always the most value for money. So make sure you get in early. And if you're a premium member, don't forget you get a ticket for free. But I'll remind you of the dates so you can mark them in the calendar. The first one is on the 12th of March in the Sofitel Brisbane in Queensland. So that's both the summit and the awards. Then the 19th of March, we'll be going to SA at the Adelaide Convention Centre. On the 25th of March, we're in WA at the Crown Perth. Then on the 9th of April, we're at the New South Wales Hyatt Regency in Sydney. And then the 16th of April, we're at the Crown Towers in Melbourne. So really looking forward to hosting the Better Business Summit this year and hope to see lots of people there. Well, that's a lot. That's a lot of things. Even though I said it was a quiet week, we've actually been doing a lot this week.
Throwing a lot around it. A lot of anticipation around it.
Lots of anticipation. And if you've got any questions for me or for Julian on Broker Daily, then do feel free to reach out. You can obviously find both of us online. All of our contact details are there. You can email in, though, also through our websites, brokerdaily.com or theadvisor.com.au. And do check out all the Broker Daily podcasts as well. You've got Business Accelerator, which is with Jason Back and Alex Whitlock. You've got Finance Specialist with Trent Carter. You've got Broker Daily Uncut as well. There's lots of great content over on brokerdaily.com for you guys, of course, plus theadvisor.com, all of the usual things going on here. But for everyone else, we hope you've had a fabulous holiday and that you've hit the ground running. Hopefully this podcast has got you back up to speed with what's been going on. And we look forward to catching you in the new year, hopefully at the Better Business Summit. We'll catch you next time for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.